We've got a perfect storm for the property prices in Australia to become overinflated. The first thing that has not been explained to people in the market is I am emotionally affected by this scheme. It's an actual perfect storm that's going to seriously handicap people. There's going to be some serious deflection and serious blame because we have a serious undersupply in the market.
As much as it is a personal purchase, it's a business purchase.
They are creating complicated messes that don't need to exist. This is stupid.
Definitely do your research. This is not a small decision. You're not buying a handbag.
How do we create a fix to this? Okay, Here is how you create a fix.
Welcome to the Finance Show with Joe. He's Joe, I'm Michael, and today we're going to be talking about the property war that's going to emerge between investors and first-home buyers. And yes, it is a war, and I'll explain why. Joe, how you going though?
I'm good, mate. I'm good. I'm agitated because look, guys. Before we go on to any podcast, and I do have to preface, this advice is general in nature. Please always contact your finance specialist or seek professional advice before committing to anything. Disclaimer done. Before I go, this is the reason why it's a fucking war. Okay, and I've started with cursing. You could see the visceral reaction. You could see how
It's a thing.
I am emotionally affected. We're calling it a property war because there's going to be first home buyers and investors on either side. Mm-hmm. People need homes.
Yep. People do need homes, it's true.
The median age of a first home buyer in Australia has increased.
Yeah, it's 36 now from memory.
It used to be 34. And it's possibly even higher now. So that 36-year-old statistic was taken from last year. I'm putting
Let's
money
say
on...
it's 37, 38 now.
Yeah, I am putting money on that because it was 34 and then jumped up to 36. And what's it going to be this year? Well, housing prices have only gone up.
Yeah.
Interest rates are going down. So that means people who... Anyways, it's a fucking war. Okay?
Just for some context for those who don't understand why it's a property war, in October, the 5% deposit scheme, or whatever they've decided to call it, is kicking in, and there's no caps, there's no income caps, and there's no places. You know how there was like a set amount of places. Let's just say it was like 100 places for first-home buyers to be eligible. That's all gone now, so every first-home buyer is eligible for this.
It was 100,000 people, okay, could be placed into the scheme.
Yeah.
Or it started at 10,000, then it went to 30, then went up to 50. I think it went up to 100. Don't quote me on this. Okay, if I get something wrong, go fuck yourselves. Anyways.
Leave it in the comments.
Yeah. But if I got that wrong, from what I remember, it was it could have been 100,000.
I think it was 100,000.
But now they've gotten rid of that. They've scrapped that completely.
Gone.
Okay. The other changes that they've included is it's no longer a two-person purchasing property transaction.
Yeah, big groups can buy it now.
4 people can purchase.
Yeah.
Okay, so they've removed that restriction as well. And they've removed the income restrictions around this.
Yeah.
Now, the reason I am extremely agitated by this scheme and the reason I'm extremely upset is, well, there's 5 key reasons, okay? Right. So we've brought up these changes. There's no income requirements. There's no limit on individuals. There's no income caps. Like, there's just so many things that they've removed, and it's frustrating.
But by the way, this sounds good on paper.
It's fantastic on paper.
Yeah, like for first-home buyers in a vacuum, this is fantastic.
Okay, so the first thing that has not been explained to people in the market is this is a federal scheme. It is not correlated with the first home buyer's grant or stamp duty concessions.
And just for clarity, the first home buyer's grant, is that's when they give you a deposit or give you a section of a deposit or something like that?
So used to purchase your first home, they used to give you a $10,000, $15,000.
That's what it was.
Additive to help you complete the transaction, but it was only up to a certain limit.
Yeah.
So in New South Wales, the first home owner's grant still exists.
Yeah.
If you buy a block of land between 450 to 600,000.
Good luck.
That's it. Okay. The rest of the first home owner's grant is rolled into stamp duty concessions now.
Yes, it is.
Now, what a stamp duty concession is, if you are a first home buyer and you are purchasing your first home and you intend to live in it, what the stamp duty concession would allow you to do is purchase for up to $800,000 and not have to pay any additional stamp duty.
Which is up to like 20 grand or something like that.
So when you get up to that 800,000, you're sitting at about $28,000.
Yeah.
Okay, with or without. And then between 850 and $1 million, okay, you would receive a concession. You get a 50% discount, 40% discount, depending how high the property value was, would be how much you're paying for stamp duty. Once you hit that $1 million threshold, those stamp duty concessions don't exist. So if you use the first home guarantee, which is purchasing with a 5% deposit, okay, to purchase something for $1 million, it's not just a 5% deposit. You need to pay $50,000 for your deposit, and then you've got to pay another $43,000 for your stamp duty. And that's just in New South Wales.
Yeah, it's different. It varies state by state.
Well, I've got these memorized because I've done 3 videos on this now. Okay, so for example, with Victoria, the maximum you can use the first home guarantee for is $950,000. Your deposit's going to be $47,500. But your stamp duty is $52,000. So you're not buying with a 5% deposit. If anything, your stamp duty is worth more.
If you decide to use the 5% deposit scheme, you are not eligible for stamp duty. You can.
You can get stamp duty concession, but up to the concession limit.
Which is under $1 million.
It depends state by state.
So let's just say New South Wales is...
New South Wales is $1 million and under.
Okay.
So you could go up to $1 million. Queensland, for example, if you are purchasing a newly built property, it's up to $1 million, no stamp duty.
Okay.
But if it's existing, you've got to pay stamp duty. Okay. And their concession goes up to 700 or 800,000. I can't remember that one particularly off by heart. But what I'm trying to say is, with the first home guarantee, all I have seen is you could buy with just a 5% deposit. You could buy with just a 5%. You could, and I'm sitting there and I'm like, well, no. You have the leader of our country using TikTok and Instagram to enable our youth to go and get pre-approvals with just a 5% deposit. A lot of the times, if you're calling up CBA or you're calling up NAB or you're calling up, a large-scale brokerage and you're not dealing with, people that have been in the industry for 2-3 years.
Right.
Sometimes they might forget to ask the question, do you have money for stamp duty? They're trying to pump their numbers up. They're trying to get as high of sales or commissions as possible. So people do forget to ask this question because they're so excited. They're like, we're going to get so many more customers. If stamp duty costs more than what the deposit is, like it does in Victoria, or it does right now in New South Wales, then you're enabling the youth to go and purchase properties and then think to themselves, it's just a 5% deposit. And then when it comes time to go to the formal approval process, guess what happens? It's not just a 5% deposit, it's a 5% deposit plus stamp duty. So you're going to see a lot of people go into financial hardship just to be able to acquire a property.
And it's more likely to happen too in Sydney particularly because they've increased the cap, the property price cap to 1.5 million, which obviously over $1 million stamp duty concessions no longer apply.
Correct. So you're going to see a lot of people struggle.
And with the median house price at 1.2 or 1.6 or whatever it was, it's pretty likely that you will reach that threshold.
And we've got a perfect storm for the property prices in Australia to become overinflated. What do I mean by this? Well, when we have a migration of 40,000 people, a net migration of 40,000 people per month, okay, we are only approving and building 170,000 new dwellings a year, 2 to 1. Okay, that makes sense for new people coming in, but we need to be building 170,000 dwellings for the people coming in, and then 170,000 dwellings for the people that are already here. We are so undersupplied when it comes to property that the prices keep going up. All this 5% deposit scheme has done is give people within the first 1, 2, 3 months that quick access to purchase property. But the people that don't already own property, they are going to struggle in about 6 months, 12 months time, even more so.
Again,
it's an actual perfect storm that's going to seriously handicap people.
And this is the thing, our predictions are combined with now lowered interest rates. investors are more inclined to get into the property market.
Correct.
Because, and we know now in October, like you just said, in the next 6 months, property prices are probably going to go stupid. That's because people are going to go stupid from October onwards.
Correct.
Because they have to buy now,
Yep.
or it's going to get fucked.
Yeah. Well, no.
Well, I mean, it is fucked, but you know what I'm trying to say. It's going to get worse.
Attaboy. That's my boy right there. That's my little finance expert.
That's me.
But this is my agitation with this whole scheme. And then in 12 months' time, we're going to get PM up on some podium and he goes, I didn't know this was going to happen. I didn't have the data like he did with the electricity and how that wasn't going to cost $275.
Right.
He got interviewed by this recently. And if for people who don't know, the original campaign was we want everyone's electricity bills to be decreased by $275.
Right, yeah.
And then he came out and originally he was like, this is our data. This is our method. This is how we modeled it. And then he got interviewed about it recently, as recent as 3 weeks ago. And he's like, no, that wasn't us. That was an outsourced company that modeled the data for us. No, it was. So there's going to be some serious deflection and serious blame. First home buyer age is only going to get higher.
Wow.
It's going to get 38. It's going to be 39. It's going to be 40, 41. Why? Because we have a serious undersupply in the market.
I think it's a bit of the federal government trying to have their cake and eat it too, because obviously nobody wants to see property prices go down. Well, people who own property don't want to see property prices go down because, especially if you're an investor, for obvious reasons. But you also need to house the population that lives here, which is why there's so many grants for first home buyers. It's not fixing the solution.
No.
This is just contributing to it. For a bunch of people, it will help them, in the next, from October to December, those people will get in, which will not be the majority. But past that point, basically what I'm trying to say is it's short-term thinking.
It's not even short-term thinking. It's short-term.
I'm talking short-term
Yeah,
thinking,
this is
quarter.
This is 3-month thinking, and then the prices are just going to boom. Why? Yeah. Because we've got inflationary pressures all over the world, and interest rates are coming down.
Yeah.
Okay, and we've seen this. Interest rates, the average rate is now 5.5%.
Something like that.
Go speak to your broker. You might be able to get lower. It might be higher. Guys,
let's just round about.
If you got a lower rate, congratulations.
Yeah, you've done well.
Anyways. There's another issue that's come. Okay, so this is issue number 2. This is for owner-occupied properties only.
Yes.
Okay?
This is not for investments.
This is not for investments. Yet again, you have a PM up there saying you could buy with just a 5% deposit. You're going to have some cowboy out there, some cowboy buyer's agent, someone that has just done the one-day ChatGPT broker course and say, yeah, I'm a broker, I'm going to go get you pre-approved. Someone is going to just punch in numbers on a calculator and say, oh, but if I just put it as an investment property, I'll be able to qualify for this scheme.
No, it's not how it works.
That's not how this works. You have to live in the property, okay? That means if me, you, 2 of the people that are inside that are working in the business at the moment go and purchase a property together, 4 of us, and we apply for this scheme, guess what? We have to live with each other.
Yeah.
It is an owner-occupied property.
Yeah. I guess the thinking behind that is to, once again, discourage investors from abusing the program or the scheme, whatever it's called.
But the trajectory between borrowing capacity for investors and first home buyers, and this is where the issue comes from. The best way to always think about it is 5 to 1. Okay, 5.5 to 1. Okay. If you're earning $100,000 a year, you got a credit card, you might have a HEX debt, something like that.
Yeah.
Okay. On average, you could borrow 5.5 times what your current salary is. Okay.
So about $550-ish.
$550,000.
Yeah.
What are you buying in New South Wales for $550,000?
A not great apartment in some random suburb.
Okay, so I actually did this.
Yeah.
I did this exercise a couple of weeks ago. There was 273 properties listed for $550,000 across New South Wales.
There you go. So it's not even just Sydney. Yeah.
I'm going one step further than that. In that metropolitan Sydney, I went and I started to look at the different properties.
Yeah, what's what?
You're talking studio apartments with just a bathroom.
That's what I mean. Not good apartments in some random suburb.
A not good apartment is an old red brick, from back in the day.
Yeah, right.
Okay, 40 square meters. I'm talking like under 35 square meter studio apartments.
Okay.
Do you want to know the issue with that? If you buy one of those apartments, none of the banks will securitize it because they see the studio apartments.
Yeah.
Well, they'll securitize it if you've got a 20% deposit,
But not a 5%.
but not a 5% deposit.
It requires you to have a partner, basically.
Correct.
To be in a couple, which, I think a lot of first home buyers typically are, especially if it's owner occupied. I think that's generally the reason why you start looking for your first owner occupied place. But I've seen this as well on the news. Divorce rates are down in Australia by quite a lot. And everyone's like, wow, are millennials and Gen Z just better at this? And no, well, partly, but most of the reason is financial. A lot of people don't want to break up because when they break up, like you said, $100,000, you've gone down from 200,000. You're going to notice that, especially if you've already got a mortgage, kids, all that sort of stuff. All of a sudden, that's nothing, that you have no money.
And lawyers are expensive.
Yeah, lawyers are expensive.
Mate, they will bill you by the second. If I'm pretty sure mine bills me by the minute. I spent 20 minutes on this. Here you go. I'm sitting there. I'm like, bro, you didn't even do anything. I did the work for you. But
he just put his little signature on it.
Yeah, I'm like, made it, but bro, are you $60 for a bloody this?
Yeah.
Anyways, but what I'm trying to say is, so this is back to point 2.
Yeah.
You're going to get people thinking, I'm just going to go buy this as an investment, okay? And the rental income will help me cover that.
No.
And the government looks into that.
Yeah.
So even if you are getting cash from the property, electricity bills still need to be in someone's name.
Yeah.
The government will look into the electricity bills and they will see whose name is on the electricity bill for that property.
Yeah.
And they will hit you with a fine and an LMI penalty if you are lying.
Yeah, because that's also one of the concessions is lender's mortgage insurance. You don't have to pay that under this 5% deposit scheme.
Correct.
Which usually you would have to do.
This brings me to point number 3. Okay. So people have not been specific when highlighting what the first home guarantee does. So the first home guarantee, you purchase with a 5% deposit with up to 1.5 mil.
Yep.
5% deposit. Okay. Your income verifies the loan and everything, but the government is coming in as the guarantor.
Yes.
Okay. So the Australian federal government, okay, is coming in to guarantee the property for that remaining 15%.
Which they're assuring the bank that someone's going to pay for it if this goes south.
Correct.
Yeah.
Okay. Yet again, GFC all over. But let's not even get into that. I'm not going into conspiracy theories now. But if the government is backing you, okay, for that remaining 15%, they're not giving you the money. They're just telling the bank, hey, just to let you know, if they go belly up, we'll cover this for you.
Yeah,
right?
normally it's your parents. In this case, it's the government.
The government, okay? Daddy government.
Daddy government. Sorry. Keep going.
Yeah.
That derailed me.
Sorry.
That's great.
It was a good one. But the issue at hand with this is people aren't differentiating this with stamp duty concessions. Okay? So with the stamp duty concession, yet again, something governed by Office of State Revenue, not governed by the federal government.
Yeah.
With the stamp duty concessions, the general rule of thumb is you can live in the property for up to 12 months. And if you want to move from that property or if you want to be able to turn it into an investment later on in life, you can.
Yeah, because all you've done is not pay stamp duty.
Correct.
There's no guarantor involved.
Correct. It doesn't work that way with the first time guarantee. If you live in the property, you have to remain living in the property for as long as the government remains a guarantor. It is not impossible to remove them as a guarantor.
No, you essentially have to buy out the government.
Correct. So either you come into that extra 15% deposit, pay down that section, and then submit your letter to request to remove the government as a guarantor, which can occur. Or if the property grows in enough value, you can then remove the government as a guarantor, either internally or externally refinancing. But if you turn the property into an investment property prior to removing the government as a guarantor,
They're going to come after you.
yet again, fine, bang, here's your fine. And number 2, we're also going to hit you with the LMI as well. So there's 2 bills you have to pay. There's a lender's mortgage insurance, and there's the fine they're going to hit you with. And often these are 90-day penalties. Would you like it if the government came to you and hit you with a $25,000 penalty out of nowhere, simply because you were trying to get ahead? The thing is, I know a lot of these property investors. They're my clients. They are not spending money every night, living this super lavish life and driving around and I'm going here to eat dinner. That's the ultra wealthy.
Yeah.
Okay.
I was gonna say I don't have 25 grand just lying around right now.
This is the thing. Like, it's absolutely puzzling me, and I'm struggling to conceptualize this because I am seeing on the front end businesses struggle. Okay, I'm seeing on the front end consumers struggle. They're not retail spending. They're not going out and spending hundreds of thousands of dollars on retail every single year. I know for a fact that Westfields up there has had multiple large designer boutiques closed down.
Yeah.
Okay, closed down because they're not getting enough revenue in. This is not something normal. So what do people, the average layman, think? They think to themselves, oh, you know what? I want to get ahead. I'm going to turn the property into an investment property because I might be able to buy groceries this week. Okay, or I might be able to afford extra groceries. Or hey, guess what? My anniversary is coming up and I don't want to spend the money on my credit card. I'd rather the extra cash. Yeah, guess what? The government's going to hit you with a bill.
I'd imagine if you were going to go ahead with this, which many people will, you'd be speaking to a financial professional, and you kind of have to do your own due diligence.
Yeah. I struggle to say that all the time.
Oh man, on like who your broker is and whether or not they're a dodgy broker, because that's another thing that we've been talking about.
Yeah.
Well, yeah, the shameless plug, obviously, but it's true. This doesn't take a lot to become qualified as a broker, so that the barrier to entry is quite low, which means that
it's a one-day course, ChatGPT assignments.
There you go. So anyone can be a broker to a certain extent. There are many good brokers out there. I'm sitting next to one. But there's also, but there's plenty.
I kind of, it took me a second. I'm like, that's nice.
But there's plenty of shit ones as well. So you do have to do your due diligence on that. So I guess partly of that is understanding the law going into it. And I'm not making excuses for the government here because why would I? But it's like they're not going to advertise like all the little terms of, the little terms and conditions and the asterisks and stuff like that. Like we work in marketing, and I know if they were like advertise this, I'd be like, get a house with 5%, and I'd be hitting that strong, which is what they're doing.
I love that you mentioned that because this is issue number 4 that I wanted to bring up. Okay. You segued in. I don't even know how you did that because I didn't even mention this issue.
We're in sync.
So the government has not correctly defined the terms and conditions of this. And the reason this is my number 4 issue, this scheme has been around since 2019. So if you've seen my Instagram reels or my videos that have gone viral, I didn't have to make those back in the day because I did not have to challenge our federal leader on the things that he was advertising to youth. The issue at hand is previously the government wasn't advertising this because you needed to be a specialist, a mortgage specialist, a finance professional to be able to offer it to a client.
Right.
Okay? Now you have Instagram Reels, TikToks, videos with millions of views on there saying, oh, you could just buy with a 5% deposit. That is not the case. And by not clearly defining the terms and conditions within that 15 to 30 second reel, you now have impressionable youth, okay? Taking this advice, not reading the terms and conditions, because guess what? Nobody reads the terms and conditions. We get hit with 3,000 terms and conditions every single day of our lives. Apple, new update. Here's 10,000 words on our terms and conditions.
Did anyone read it?
No.
I just got iOS 26 the other day. Did I read the terms and conditions? Absolutely not.
Yeah. So nobody's reading the terms and conditions. We had to back in the day.
Yeah, that was part
back
of
in the
your
day,
job, right?
back when I was first becoming a broker. Hey, this is the course on the first home guarantee. Make sure you read, understand this manual so that you are an accredited broker who can offer this through our bank.
Yeah.
That's not the case anymore.
Yeah, I guess as a response to that housing becoming such a large talking point now for Australia, because it is a big issue, but it has been an issue for a long time. But I think during the COVID period, the 0.1% interest rates and everyone just going crazy. Wasn't that really the start of like that dramatic spike in prices?
No, the dramatic spike in prices has existed forever.
No, of course. But it's been an upward trend. It literally, even during the GFC, our house prices didn't go down.
Yeah.
I just mean like when it really shot up, because I can't remember, but I think it was like, 2020, it just shot up. Remember when people were getting money for renovations and stuff like that? That kind of period where people were just getting money and were like, well, I'm not going to not put it in property.
Yeah.
And that just, made things.
So the average apartment, you could buy a 2-bedroom, brand new apartment in Cogra at the start of 2020 for like 525,000.
Yeah, I was looking at a 2-bedroom place in Parramatta that I think was like 650.
Yeah.
Something like that, 700.
Yep. And now, good luck trying to get something for under 850. Okay.
Yeah,
like in those locations, I'm talking particular locations, particular types of apartments,
Yeah, of course.
types of things. You know, if you bought something red brick, renovated it, all that sort of stuff, congratulations. You wasted 18 months of your life to have something that's worth exactly the same as it was 18 months prior. Okay. Yes, I am being an asshole. Okay. But I have to be because I see the comments, guys. I see them. Okay. Get educated before you go and do this stuff. Oh, I know I'm going to do this. Shut up. Okay, I live in this world. I eat, breathe. I haven't slept. I know this stuff. This is an amazing rant. You should cut this up. What I am essentially trying to say is your 10-word comment will not affect my opinion of someone that has done this 8 billion times. Okay, like I'm sorry to say this. Okay, if you're a unicorn, great. You are 1 in 27 million people.
Yeah, gotcha.
To be able to get into the terms and conditions of this scheme, you needed to be able to hit 1, 2, 3, 4, 5. All right. I know for a fact someone is going to auction October 1st. I know for a fact someone's going October 8th. They have not spoken to a broker. They think to themselves, oh, I'll just turn it into an investment property. They have not done the adequate research in order to be able to make a conscious decision in purchasing these properties.
Yeah.
And they're gonna get ruined. They're gonna lose their deposit. They're gonna go into financial hardship. They're gonna go get a personal loan to cover the stamp duty. They're going to go ask their brother, okay, to jump onto this loan with them. And then their brother has previously owned property, so they're not going to be able to qualify for the scheme.
Yeah.
There's so many things that aren't being accurately listed. I used to question the government as to why isn't the government advertising this 5% scheme properly? And then I've realized recently, no, this is the reason why. They wanted professionals, someone like myself, to discuss this. Okay. So number one, they wouldn't be liable if they said the incorrect thing.
Yeah.
But number two, for somebody to sit down and accurately explain to people, hey, you can purchase with a 5% deposit if you hit these 7 boxes. Not, oh, you can just buy a property with 5% deposit. Oh, I'm not going to include stamp duty, income implications. I'm not going to talk about servicing.
Yeah.
I'm not going to talk about the fact that you have to go get pre-approved.
It's like when you buy anything, as yourself as a consumer, do your research, do your stuff for yourself, and also, especially now when it comes to buying property, it's a big purchase, obviously, and it's as much as it is a personal purchase, it's a business purchase, as we spoke in the last episode. Do your due diligence and speak to a broker because it's literally free. It's literally free. There's no excuse not to.
No. Speak to a good broker.
Well, speak to a good broker, but even a bad one can tell you something. Like, canvass them. Speak to a couple of them.
Yeah, but
what I'm trying to say is, like, part of the responsibility is on you as an individual. Like, the government can only try so much. We already live in such a nanny state. I don't want my hand held for goddamn everything.
Good that you mentioned that, because I want to bring up issue number 5, where I am going to do some hand holding now. Okay. So we've ticked all the boxes. Okay. Liam, Michael, Joseph, my lad who's inside. All right. Hey guys, there's 4 of us. All right, let's go buy a property together.
Yep.
Okay. How much you got? 8 grand. How much you got? 5 grand, 7 grand, and 6 grand inside. We've got $35,000. I don't even know what I added there. We've got whatever.
We've got a deposit.
We've got. Let's say we came in with 10 grand each. We've got a $40,000 deposit.
Yep.
Let's go buy something worth $800,000. Okay. Number one, New South Wales. What are we going to buy something worth $800,000?
An apartment.
We're going to buy a 2-bedroom apartment in. I'm going to go with Bankstown. Okay. The 4 of us are buying a 2-bedroom apartment in Bankstown. Okay. We might be able to get a 3-bedder. Maybe. Okay.
Who do you reckon is going to share the bed?
I love that you asked that question. This isn't planned, by the way.
No, it's not.
Okay. So we've got a 3-bedder. Michael gets married.
Yeah, which is I am due for.
Okay. Joseph gets married. Vlad gets married. Liam gets married. What happens?
That's going to be fun.
None of our spouses are able to qualify for this scheme anymore.
Yeah, because technically they own property.
Correct.
Yeah.
Outside of that, they all now have to move in.
Yeah, that's going to be the real fun part.
Owner occupied.
Yeah.
Okay. So now all 4 of them have to move into the property as well.
Yeah, and you could make the argument, buy that person out. Okay, granted, that's true. But if you're already in a situation where you needed 4 of you to get the deposit together, it's unlikely that you have the money to be able to afford to buy that person out.
And if you have to buy them out, you have to pay stamp duty.
Oh, see, there you go. A new thing I didn't know.
Okay? You have to pay the stamp duty. You have to remove them. You have to do another internal refinance process to make sure that it's only 3 parties that are on the loan. Okay? There are better yet, you just made me think of one. If we are doing that and we've got all the wives now involved, there is a possibility that they might have to be on the application because all of a sudden it's not just one person, it's not just 2.
Yeah.
And we have to count their liabilities.
So like a crazy debt.
I get married. Okay, Michael gets married. I want to get bought out. Okay, you guys come together. All right, guys, we've got to buy Joe out. He doesn't want to live here anymore. His wife is crazy. True story. Okay, we've got to do all these things. Perfect.
Right.
Do the internal refinance. All that's done. Okay, but Michael's wife now has to go on the loan. Hey, did you guys know that Michael's wife has a $300,000 credit card? Bang! Application declined.
You almost gave me a heart attack.
Application effing declined.
Yeah, 100%.
Right there, baby.
Yeah.
Right there.
Yeah, and it's a very simple decline as well.
What the F? So they are creating complicated messes that don't need to exist. Listen to my frustration, okay? Listen to it. I've taken the glasses off. I'm pissed. I'm pissed about this, okay?
Yeah.
This is for owner-occupied properties only. In what scenario do you have 4 friends coming together to buy one owner-occupied property?
I mean,
have you seen that ever occur?
Not friends, no. It's always relatives.
Okay.
Always relatives, if it's going to happen.
So now we got conflict between cousins?
Yeah.
I've already got conflict with my cousins. I don't own property with them yet.
I get you. I get what you're saying. Yeah. Look, I don't. The thing is, I don't know what the solution is.
I found another issue.
Yeah.
Sorry.
No, go.
I didn't even discuss this one. Removing the income requirements.
Yeah, which are gone now.
This is stupid. Okay, so where I'm going with this, what the previous income requirements were if you were single, $125,000 was your maximum income to be able to qualify for this scheme. If you're a couple, $200,000.
Yeah, okay.
I like this. I did think that it did need to go a little bit higher, and maybe there was a standard deviation of 5%. If somebody owns $125,000 and $493, they should be allowed to qualify and stuff.
Yeah, there were issues with it.
Okay, so like I thought there were issues with that, but now let's say we've got someone who's a finance professional, okay, earning $250,000 a year,
right?
And they go on an auction against someone that earns $100,000 a year.
Yeah, and again, this brings back to the whole war that's going to happen because all these first home
No. I'm not going investors, first home buyers. Yeah, I'm talking 2 first home buyers.
Oh, okay.
Yeah.
Okay.
2 first home buyers. The guy with the $250,000 pre-approval, okay, and the guy with the guy that earns $250,000 and the guy that earns $100,000. They're both going to auction on the same property.
Yeah.
Now that property might only be worth $800,000. Person who's been pre-approved with $100,000 income, they might be able to borrow, $730,000 because they've got someone else in there or something.
Yeah.
So they're going in, I've got a 10% deposit. We got $70,000 and we could borrow $730,000, but we're at an auction, a non-transparent auction with a fake buyer's guide and all that sort of stuff for a property that they said can be purchased for up to $800,000. I'm here. I earn $250,000 a year. I'm at this same auction and I'm looking at it and I'm like, I've been approved for about 1.3 mil. Okay. But I really want this property because it's right next to Bondi Junction's train station.
Yeah. And they can just keep going. They can keep bidding. So it's going to inflate our property prices even higher. Yeah. So you're asking me, okay, and I'm going to wrap around. So we found 5 issues with this scheme, plus the terms and conditions not being properly advertised. So we're going to put that as issue 6. That's not going to be issue number 5. Okay. Include that on the podcast. But then you're asking me, how do we create a fix for this? Okay, here is how you create a fix. We obviously need migration. Yeah.
And
it's literally what's keeping the economy afloat.
And you and I, we've argued about this for days at a time.
Yeah.
Okay, how do we fix this? I've got the simplest fix in the world. The actual simplest fix in the world. It's got nothing to do with migration. It's got nothing to do with people. It's got nothing to do with bringing housing prices down. It's got nothing to do with negative gearing, none of it.
Yeah, right.
Do you want to know what the solution is?
I'm all ears.
No one in government works overtime.
Is that the solution, or are you just had a statement?
This is the solution.
Okay.
The government doesn't have KPIs either.
Okay.
If you work for council, your hours are, I think it's 9:30 to 4, and then everyone goes home.
It is.
All right, guys.
They get every second Friday off as well. My cousin does. He works for Blacktown City Council.
Okay.
Yeah, breathe.
This is how people just stay elected. I haven't had a day off. It's so long. I've helped so many businesses avoid bankruptcy, and this guy gets every second Friday off. Anyways, create an overtime system within the council that is KPI based. Okay? If you want to be able to work overtime and earn extra income, all right, you can work the overtime.
Right.
You can earn the extra income. You can complete all the tasks that you need to. And guess what? It's KPI based. So if you don't hit those KPIs within that overtime structure, I am not telling people in government we have a capitalist country or anything. I am not overspending on a new scheme. I am not building houses or over-promising on $100 million housing scheme or $100 billion housing scheme and they delivered 15 houses. I'm not doing that.
Right.
I'm literally saying, okay, we've got 200,000 people that work in council at the moment. All right. If you want to work overtime, this is the overtime scheme and it's KPI based, meaning if you don't hit your certain targets at those certain hours, you don't get to earn the incentive or the right to work overtime. You're not losing your job. You still have your salary. You're still getting your every second Friday off.
The overtime. Yeah.
Okay. But if you want to earn some extra money, because guess what? People that work at council, they do it tough too.
Yeah. Everyone's job is rough. Yeah.
So what happens? All of a sudden, you've created incentive for people in the government to get things done.
I was about to say, because I was going to ask, I'm like, where is this going? No, I understand now. I get it completely. So it's essentially, you're arguing for productivity within councils, local councils, even state, whatever, to get these things rolling. Because a big part of the issue with housing and approvals and all that sort of stuff is the bureaucracy and how sluggish everything can move. And holding costs are only getting more expensive, hence why we're seeing developers and stuff go out of business. Yeah, exactly. So providing an internal incentive with this overtime thing, you're saying it would increase productivity and thus help things out in general.
I'm not saying it's the one-size-fits-all solution.
But it's something.
But if we can increase the approval process, so we've got 170,000 approved dwellings ready to be built, according to the statistics, the ABS and everything, right? If that increases productivity by 20%, we've got a 20% higher chance of getting approved now. That 170,000 moves to 204,000. So the housing shortage decreases, the rate of inflation decreases, okay? And you're actually helping everyday Australians get into the property market sooner without hindering negative gearing, rental, property valuations. Instead of your property growing by 20% next year, it grows by 14. Guess what? That's a steady rate of growth.
Yeah, it's sustainable.
It's a sustainable, and guess what? Less defaults will happen with mortgages.
Yeah.
You have less financial struggle. You won't have this massive migration war occurring where you got racists on one side and then you got people that are saying, don't be racist on the other. And then you got me in the middle saying, I am a migrant. Please fix housing. That's it. Just fix housing. Okay?
Yeah, I get what you're saying.
I am an import.
Yeah.
Like, what do you want? Like, I'm saying it from my mouth, from the horse's mouth.
My grandparents as well.
Yeah.
Both sides.
So you want to, you're asking me what the solution is, okay? It is increased productivity, but it's not hiring more people, it's incentivizing people.
Yeah, okay. I understand what
Your cousin works for council, every second Friday off, okay. But you know what? Those 4 days leading up to that Friday, okay, that every second Friday,
he's got a 4-day work week where you do longer hours.
No. I'm not saying work longer hours, okay? He wants to earn a little bit more money. Okay, you know what? I'm going to do 4 hours extra overtime, Monday, Tuesday, Wednesday, Thursday. Instead of finishing at 4 p.m., I'll finish at 8 p.m.
Yeah, okay.
All right. I'm going to earn in that time and a half, double time, whatever it is. I can earn an extra week's worth of wages. So if I did 16 hours, That means I'm going to get paid for 32 hours, let's say. All right. And then on Thursday night, I'm going to go for the biggest bender ever because I've got Friday off. Incentives. Young people incentivized to work. Young people incentivized to bender. Young people incentivized to be able to be more efficient. And guess what? We might increase productivity and we might have more houses approved. And if we have more houses approved,
More places to live.
more places to live.
Property prices are sustainable.
Have I done anything that is going to piss off a large electorate?
I don't think so. I think the only people you would piss off is...
You like this one?
Yeah, I think you'd just piss off councils, which, that's fine.
Why did I piss off councils?
Oh, they have to pay people more.
Yeah, okay.
No, I'm not. I'm just coming up with something.
No,
This is
no.
not like an actual beef.
No, okay. So, perfect example. You're pissing off councils. They have to pay people more. But they're going to have more council rate fees coming in because they're going to have more dwellings approved. So did Joseph just solve the housing crisis? Yes. And how did I come up with this? I was at a charity dinner.
Yeah.
Somebody came up to me. They came up with this massive scheme for capital gains tax, and we should be incentivizing this and doing this. And I go, why don't they just start paying people overtime to finish work on an incentive-based system?
Seems like the simplest
So
way.
go into the comments now, okay? If you want to see housing prices go down, and if you think to yourself that all we need to do is increase efficiency and we need to incentivize people to be more efficient, drop a comment and let me know if you agree with this system. And if you do, give this video a thumbs up.
Yeah, honestly, and go ahead in the comments, like, be civil and everything, but...
No, don't be civil.
be civil. They're the investors and the first-time buyers in the comments. But, like, talk about it. Discuss it. This is how you get things moving, creating dialogue. You know, it's a good thing.
Yeah.
But don't just yell at each other and refuse to change your minds, because that does nothing.
I guarantee you, if you stay to the end of this video, okay, which 10 of you might have.
Yeah. we see the stats.
Yeah. 10 of you might have watched the end of this video. And if you heard my scheme, if you have an actual issue with it, I want to hear it.
Yeah.
Because I saw your eyes change. Not your mind, your opinion. I saw your eyes change. There was optimism when I discussed this. If you want help with this scheme,
Yeah.
if you need help with your finances, if you want to grow, if you want to refinance, if you want to get into the property market sooner, and guess what? It's going to get more expensive, so you should probably do that.
Yeah.
Contact us at itssimple.com.au. Instagram, whatever. You can do whatever you want.
Yeah, we're on the socials.
Because I'm on there all the time.
Yeah.
Anyways.
You've seen it.
You've seen me yell. Wait, did I already say all that?
Yeah.
Oh, if you need more information on the first home guarantee, it's on our website. It's also on the government websites as well. So I would be making a conscious decision and looking into that prior to making any financial decision.
Yeah, definitely do your research. This is not a small decision. You're not buying a handbag.
Yeah, pretty much. Okay. So thank you again for listening, and we'll see you next time.
See ya.